from the Government of Canada CRA website newsroom. So we're just going to go through it. This was published on December 4th, 2024. This is regarding some businesses. So the CRA offer a variety of federal tax credit that can help your business save money. So here it says the Canada Revenue Agency provide a range of federal tax credit aimed at helping your business save money. By claiming this tax credit, you can lower your taxable income or lower the amount of tax you owe. To help you find which credit you may be eligible for, we've put together this handy resource. So federal tax credit for businesses, Canada carbon rebate for small businesses. This rebate is a refundable tax credit that helps balance the expense that comes with carbon pricing by automatically returning a portion of the federal fuel charge proceed to eligible Canadian Controlled Private Corporation, CCPC. Payment for the rebate have started to be issued. Most eligible CCPC should receive their payment by the end of the calendar year. So this is very important one because I know the carbon tax is actually going up pretty soon. So it's always good to take a look if you qualify or if you're paying a lot of carbon tax to get that refund back. Okay, so next one is Canadian Journalism Labor Tax Credit. The Canadian Journalism Labor Tax Credit offers financial support to qualifying journalism organization. This is a 35% refundable tax credit on qualifying labor expenditure paid to eligible newsroom employees, up to a salary cap of $80,000 per eligible newsroom employee. The rate increased to 35% for the period from January 1st, 2023 to December 1st, 2026. After that period, the rate will return to 25%. To qualify for this credit, an organization must be designated as qualified Canadian journalism organization. Once designated, it must meet additional criteria to be recognized as a qualifying journalism organization, which is required to claim the tax credit. To find out if your organization may qualify to QCJO designation, try using your self or online self-screening tool. So this is actually a lot of saving, a lot of money that they're offering right now to businesses that do journalism. All right, so here, the next one we have Federal Foreign Business Income Tax Credit. It says this tax credit help reduce your Canadian tax by providing relief from double taxation resulting from tax paid to foreign government on business income earned outside Canada. To claim this credit, you must provide details of the foreign tax paid and meet specific eligibility requirement. Okay. So if you do business with another country that charge a lot of taxes, you can apply for that. So if you do a lot of business in the US, things like that, it's always good to take a look if you can claim or apply to get this refund. Okay, federal lodging tax credit. This tax credit provides support for individuals and businesses that have paid lodging tax to a province for lodging activities. It helps reduce federal income tax payable by eligible businesses. Okay. I know, for example, in Ontario, if you rent a hotel room, you have lodging tax. In Quebec as well. So if your business rented a lot of hotel room for your employees, things like that, you may be you may qualify for this refund here. All right, federal qualifying environmental trust tax credit. This refundable tax credit is available to people or organizations who receive income from qualifying environmental trust. Okay. This is T3. Environmental trust. So general distrust this is a trust resident in Canada or province or corporation resident in Canada that is licensed or otherwise authorized under the laws of Canada or province to carry on in Canada the business of offering the public its services as a trustee, or that is not an excluded trust and maintain at that time for the sole purpose of funding the reclamation of a qualifying site in Canada or in the province that is or may become required to be maintained under the term of qualifying contract or qualifying law that had been used primarily for or for any combination of operation of a mine, extraction of clay, peat, sand, shade, or aggregate, including dimension, stone, and gravel. Deposition of waste. If the trust was created after 2011, the operation of a pipeline, as long as the other requirement defined in subsection 211.6 of the Act are met. Okay. Now, there is a federal film tax credit. All right. The following two federal film tax credits support Canada creative industry. The Canadian Film or Video Production Tax Credit encourage the creation of Canadian film and television programming and the development of an active domestic independent production sector in Canada. This refundable tax credit is available at a rate of 25% of the qualifying labor expenditure in respect of eligible production. Okay. So if you do video production, film, you may qualify for this one here. The film or video production service tax credit promote Canada as a location of choice for foreign and Canadian-owned film and television production, employing Canadians. This refundable tax credit is worth 16% of the qualified Canadian labor expenditure for an accredited production. Okay, so a lot of film studios, when they come to Canada, they usually apply for this to get some discount where for the location if they film in Canada, and also if they employ a lot of Canadians on that production. All right, so the next one here, investment tax credit. This tax credit applies to specific investments, including investments in scientific research and experimental development, eligible apprenticeship, and more. Okay, investment tax credit. The investment tax credit can be claimed for certain qualified property and a certain expenditure that varies depending on the type of investment for which the credit is being claimed. The ITC apply to, so he says scientific research, basic research, applied research, experimental development. Okay, he says clean economy investment tax credit. As a business, you may be eligible for refundable tax credit for investment in Canada that support the transition to a net zero emission. These investment tax credit include clean hydrogen, clean technology manufacturing, carbon capture utilization, and storage. Okay, so this is regarding investment. So if you invest in a lot of scientific research and also to reduce the tax emission, clean the economy, manufacturing and processing profit reduction. This profit deduction. This deduction provides tax relief to corporations that earn at least 10% of their revenue from manufacturing or processing goods in Canada. A rate of 13% is applied to taxable income that represent Canadian manufacturing and processing profits, and that is not eligible for the small business deduction. Okay, so if you manufacture a lot of goods and that affects your profit, definitely you can reduce your tax on those profits here. Return of fuel charge proceed for farmers tax credit. This tax credit is a way to return fuel charge proceed to farming businesses. Okay, so this is for farmers. I'm guessing they use a lot of fuel, so they can beneficiate from this. And there's also the carbon rebate as well. So this is more for farmers. To qualify, farming business must have gross eligible farming expenses of $25,000 or more. All or a portion of these expenses must be attributable to a specific province that is a designated province. The credit is calculated based on eligible farming expenses attributable to a designated province for the tax year multiplied by the applicable payment rate. All right. Next one is zero emission technology manufacturing deduction. This deduction offers tax relief for corporations involved in producing zero emission technologies from 2022 to 2031. So 2022 and 2031 qualifying manufacturing benefit from a reduced tax rate of 7.5% instead of the standard 15%, and 4.5% instead of the small business rate of 9%. Okay, this reduced rate will be gradually phased out for tax years that began in 2032 and will be fully phased out by 2034. All right, he says, federal tax credit are an effective way to manage your tax obligation while supporting your financial goals. Staying up to date with eligible credit, make sure your business will benefit fully from available tax relief. So this is mostly when you do your income tax at the end of the year, for businesses. When you file taxes, when you do your T2 return, so you can apply for those depending on the sector you're in, and you can receive a lot of rebate deduction for the tax you've paid, or even for some expenses. All right, so that was on the CRA newsroom. So this is from the CRA website directly, Tax Tip 2024.